Bears are washed out. Just for example, I poked the Bears a little bit over the last week, and they've just given up. Like no one's arguing with me anymore, which is a much different sort of tune than we've seen over the last several months. Where anytime I would put anything, constructive for the market, because obviously there was a lot of constructive behavior in the market, I would get all this pushback about recessions and the inflation and the Powell and all these things. Now it's like, okay, well, yeah, they're not fighting me anymore. So it's very interesting. I feel like I say this every conference call. This might be the most important chart in the world, right? You're looking at financials going back to the great financial crisis highs, right? And you got home construction going back to the pre-housing bubble crash, right? Right? That was resistance again in 2018, resistance again pre-COVID. We ultimately broke out at the end of 2020. And then last summer, retesting those levels back to the scene of the crime. And I was saying it then, I'm like, guys, nobody's talking about this. Like, think about it. The highs in financials before the quote unquote great financial crisis are arguably some of the most important prices in the history of the stock market. 80 bucks is the level for XLE, right? Still below that overhead supply from 2014, but above 80, right? So kind of like in that no man's land, right? Oil still has failed to break out, right? But energy stocks relative to the commodity itself hanging in there okay. Look at energy stocks, still haven't even broken out, guys. Still haven't even broken out, right? We could just be getting going. Think about that. You've had an epic run in energy stocks. The XLE alone has tripled, more than tripled, almost quadrupled, and we still haven't even broken out of this base yet. So just think about that. You think that we're in the final innings here, or you think we could potentially be in the second or third inning of a bull market in energy and commodities? I'm leaning towards I'm leaning towards the latter. I think that ultimately we break out. It's going to be tomorrow. Probably not. Probably won't be this month either. Maybe not even this quarter. But later this year, we're going to see XLE up here, in my opinion. We're going to be aggressive buyers at that point. Inflation protected treasuries continue to make new lows relative to nominal yielding treasuries. So people are like, oh, what about inflation? Oh, the CPI print. All that stuff is bullshit. The CPI, we know, is incorrectly calculated. Like, we know that. Like, it's not a secret. It's been well documented. It's just incorrectly calculated. Number one. Number two, it is extremely lagging because it's a year-over-year number. So, like, I really don't understand the obsession over an estimate that we know is incorrectly calculated and we know is very lagging, right? Like, why don't you use an incorrectly calculated data point that only goes back 3 months, right? Which is rolling 3 months as opposed to 12 months. Still incorrectly calculated, but at least you're getting more near-term results. CPI does neither. If you really want to know what the market is pricing in for inflation, just look at the bond market, right? I don't trust humans. I trust dogs, and I trust the bond market. Now, let's finish up with some of the worst stocks in the world, communications. Look at this. Look at communications, guys. 1, 2, 3, 4, 5, 6 weeks in a row. Just face ripper. These are, if you're wondering, this has nothing to do with fundamentals. It has nothing to do with the Powell. It has nothing to do with Ukraine or whatever gossip, they're talking about. You know what this is? These are hedge funds blowing up.